So welcome to the Treasury Elite Leadership Series. Time and again, we bring in world-class speakers and business leaders across the world in the field of leadership, treasury, VC, private equity, hedge funds, and uh, we conduct various programs, webinars, and conferences in different formats. Treasury Elite Leadership Series is one such format where we learn from industry thought leaders about their experiences of running their businesses, opportunities and challenges they encounter, and broad global trends they see for the future. Good afternoon, everyone. I'm Abhishek Goenka, founder and CEO of IFA Global and Treasury Elite. We bring in one-stop treasury and foreign exchange solutions for companies in India over the last 17 years. And today we have Mr. Suhail Smeer, CEO of BharatPe, one of India's largest growing financial services company. Suhail is a young achiever. He has close to a decade and a half experience of working in companies, right from energy, consumer, and financial services. Suhail is passionate about building the fintech and the digital payments industry in India. Welcome, Suhail. How are you doing today?
Thank you very much, Abhishek. Thanks for the kind words.
Glad to have you today as a part of the Treasury Elite Leadership Series. In the next 35 minutes, would love to learn from your experiences and the latest trends in the business. Well, my first question to you, which I asked a lot of global CEOs, is, what drives them today? I mean, it is not only about the money. What keeps you excited every morning? And if I may ask, what is your why?
No, I think stops being motivation after a point where you at least have your basic necessities taken care of. I think what really excites me are two things. One is an opportunity to build something big, right? And I've moved from sector to sector, from energy to sort of consumer to now financial services, and in the middle dabbled a bit of hand in the IT space, dabbled a bit of hand in the investing space. I think the quest is to always find something which is huge, which creates impact in the lives of others and at scale. And sort of the second thing which keeps you motivated is the people you work with, right? So we've always taken pride in the kind of people we hire and in all the companies I work for, right? So I think most of the times, even though you end up being their boss sometimes, I think most of the times you are learning from them, then they are learning from you, right? So very exciting to come to office and meet sort of young, bright folks who are there creating stuff which have created ever.
Excellent. So, since you mentioned about teams and the energy what the team brings around in the office, that's a common theme a lot of entrepreneurs have talked about. It's a team which drives us always. So I would ask you, my second question is that, how do you create a world-class team? How do you create energy in the office? And how do you ensure there is a sense of great innovation culture?
Yeah, I think first it starts with, and that's sort of the bare minimum you need to go to get to, is sort of a shared vision, right? So I think you find people who are incredible many times in your journey, but not necessarily all of them are part of what you will classify as your great team, right? So I think most important to me, at least, is having a sense of vision which is aligned, right? So if you guys want to build the same things, and if you guys by and large have the same hustle and passion towards it, and like basic hygiene capability given, you will always do better than sort of two people who are out there to build something very, very different, right? So I think therefore a very important part of building a great team is to find team which believes in your vision or which believes in the company's vision, right? So I think that's step one. I think the step two to me is I think it's a combination of sort of trusting your team and trusting yourself, right? If you hired that team with your best intent and with your understanding that they are the best people to do this job, you have to give them a lot more independence than most people are comfortable doing, right? So we all say we give independence, but then we are always looking over the shoulder of the guy who's doing that job, right? So I think you give sort of people independence and trust them to deliver, and create a setup where all victories are celebrated and all failures are like ideally celebrated at a minimum, not reprimanded, because these are smart people. They believe in your vision. You've done the hiring. Then you have to assume that if they've done a mistake, it's part of the learning. And if you would have done that piece of work, you may have done the exact same mistake, right? So I think when you operate with that mindset, you give people a lot more independence than what they are conventionally used to, and you give them a lot more responsibility than what they are normally used to. I think I've realized most people step up, right? And once they step up, that's where all the legs around innovation, etc., keep coming in, right? So half the time my team is basically saying, so you didn't know this, we've implemented this already. Numbers are looking good now, so therefore we are telling you, right? So I think if you sort of have 10 people along in your journey who think you are willing to take calculated risks, who are willing to experiment, I think my job as a leader becomes that much easier, right? And therefore, at this simple thing which I keep telling me, which is like trust till proven wrong, right? So till that time, you give people all their independence, let them make their own mistakes, let them learn on their own.
Right, right. So the world has changed, Suhail, in the last 6 months. I mean, the entire markets have changed. The money flow have changed, and so has the risk changed. So I think lately even RBI has been very much concerned about the net worth and the capital requirements of companies and whether they have been strong enough to operate in the space like what banks are.
Yeah.
So how do you ensure that we have a good combination between growth, innovation, and risk management in the current environment?
No, I think that's a good question. I think it comes back to us. I think it's been obviously questions, fintechs. Most of us lose some bit of money. It's always a question which will keep coming back to. I think there is a fundamental prudence on how you are building business, right? So whether it's an early stage company or a late stage company, how fast you want to grow is obviously a question. But at what cost does that growth come at, and does it even make long-term value, right? So if you're acquiring a customer, what is your cost of acquisition, and what money will you make him, even in the best case? And if that's also not covering your cost, then you're probably doing this wrong. And I think some of the companies, rightly or wrongly, in a period of infinite capital availability, had lost a bit of sort of touch with that numbers, right? You would say it's okay if I'm losing $20 million a month on a $5 million a month revenue, because at scale this will work out, right? That doesn't work out at scale. If you're losing $5 million a month on a 20 million revenue, yeah, I can argue at scale that will work out, but not the reverse, right? I think, and therefore I think companies which are generally thoughtful about costs, generally very thoughtful about what products they will play in, which are high gross margin by definition, I think those companies will obviously do fine, right? So there is a next 2 year, depending on who you ask, people say next 2 years. So people who are more optimistic like me, they say next 6-8 months. There is going to be sort of tightening in the market. I think the good thing about this is fundamentally strong businesses, whether they are loss making or profitable today, but have good gross margins, have good sort of operating models, will stick out of it, right? And will continue to sort of thrive. And I think in a way, it's a good shake-up of the market and separates the shaft from the rest, right? And this is therefore also a great time to be in business. Luckily for us, we have enough capital in the bank. We don't have to worry about fundraising. My heart goes out to founders who are probably building good businesses but are like low on capital right now. It's tough for them. But I think structurally, businesses with sort of strong gross margins will continue to do well. Will continue to attract capital. It may not be at superfluous terms, which was happening a few months back. But I think there is, if you think from an investor point of view, they are in the job of investing. They can't say for the next 2 years we're like going on a vacation, right? So they will keep on investing. the rate of investment will reduce probably. That money will chase even a narrower set of companies who have proven business models. But capital availability killing a fundamentally strong business is sort of unlikely to materialize. I think on the other part, I think RBI is by and large whatever RBI is doing is with the right intent, right? So you do want financial stability, you do want people who have the ability to sort of handle scale to be in the business, and you want to manage systemic risk in the system, right? So I think the direction is great. I may agree with some of the independent sort of regulations, I may not, but that's not really my space. They're starting from a much better sense of the market and much more wisdom than what an individual company would do. But I think it's a step in the right direction to go towards bigger and bigger companies.
Great. Suhail, you mentioned about some numbers about how much are you burning and how much you are generating. And lately, there are hundreds of companies who are emerging and the numbers are not justifying and questions are being asked, but somehow the next fundraise happens. I don't know how. And the next fundraise is even bigger. So if you have to make a secret sauce on, you should look at these kind of companies in the fintech space, these 3 or 4, 5 parameters. And if that is being met, then you are okay that the company is investable, the company is going to generate value for its people and for the customer.
Yeah, absolutely. I think in fintech space, I think 2, 3 things are important. One is just distribution, right? How many people do you have on your platform? Do you have distribution? Do you own the customer? Right, and that sometimes basically means in fintech valuations tend to be much ahead of revenue because distribution comes first, monetization comes later, right? So if you will even talk about BharatPe, when we were valued sort of almost $1 billion, our revenue was not even like $20 million a year, right? Because that was the phase of building distribution. And the investor was taking the leap of faith on what BharatPe can build on that distribution, how big can that be, right? So sometimes there will be sort of, if you're in the distribution build out phase, it's almost like I go to a very old world industry, set up a power plant. Before power plant starts generating even 1 rupee of revenue, you spend 7,000 to 8,000 crores, right? So, but doesn't mean you will not value power plant at 8,000 crore because capex is sort of incurred, right? So similarly, distribution is capex in our business, and therefore that's a very important metric to evaluate on what is the distribution, what is the ownership of that distribution, and will that customer sort of stay with you or move on? And what can you build on top of that, right? So I think that's sort of one. The second part, which I look at very closely, is where eventual monetization has to come from. How high a gross margin business is that, right? So, for example, if you are building businesses around lending, which are structurally high gross margin, if you are building businesses around loyalty, which are structurally high gross margin, if you're building businesses around commerce, which are structurally high margin, probability of sort of becoming profitable at scale is reasonably high. If you're building businesses purely around payments, for example, I don't feel confident, right? Because payment per se is a very difficult place to make money. Interchange rates, NDR rates in India structurally keep on coming down every year. Like earlier, everything used to be like 3%, then UPI became free. Now credit cards are lower. RuPay has sort of literally made debit almost free. So structurally, payment, what you can make will keep on reducing. And structurally, the cost of doing payments because of compliance, fraud prevention, data security will keep on going up, right? So it's a low gross margin business, which will tend to lower and lower gross margin over a period of time. So I would shy away from sort of, I think the criteria I'm going at is not like payment or not payment, but the category I'm going after is high gross margin businesses. Someone may believe that there is a form of payment where there can be very high gross margin and maybe it's a great business. But high gross margin, high distribution, high ownership of that distribution is sort of what I look at, sort of, at least when I'm looking at as an investable business or not.
Right. Right. Of course, you have had so much of experience in investing in startups and various industries in various sectors. So, I was I was sitting with a VC uh, fund manager last week, and we were discussing on the numbers, as in how many people actually make a startup and how many actually turn to a unicorn, how many get funded, and how much does the money the promoter really makes. So I think since you have been a serious investor and you have a lot of experience in this particular area, now this question I have put this across to give a holistic idea about the overall investing in the startup space uh, for two kinds of audience. One is the people who are investing, which is the family offices, second generation, third generation, who have taken alternates as something investable as an asset class, and also the young people who are coming up out of colleges, IITs, and all that, and they're all very much excited about this space. I want you to give both these parties a reality check, as in what are the risks, what is the opportunities, and how should you take this as an industry.
Yeah. So I think let me start with the founder's view first. Odds are completely against you. Most likely you will fail, right? So let me start with that. Uh, like, you will know these numbers much better, but I would peg the probability of a founder having a positive outcome, and positive outcome defined as what he would have earned more than his job, probably 1 in 1,000. Right?
1 in 1,000.
1 in 1,000 is my best guess.
Okay.
But does that mean you should not set up a company? Absolutely not. I think the way you treat setting up a company is the experience of a lifetime. Is trying to build something you are really passionate about. Hopefully it will work. It doesn't work, you will maybe pivot into something else as you go through that journey, which will work. Or at the worst case, if you want to, like, after 4 years go back to your corporate job, I think what you would have learned is sort of irreplaceable, right? So I don't think probability of success should deter a founder from building something he's very passionate about. Obviously it's easier said than done for me, because if you're a young kid who doesn't have financial support, and you really need to take care of your family, etc., right? When circumstances may not help you on that dimension, but if your sort of basic necessity, family, etc., is sort of sorted and you don't have large liabilities, I would always say set up something, right? Forget the odds. If you believe in it, hopefully enough people will believe in it that it will become big. I think from a investing point of view, I think last 3 years I've seen a lot of people enter into the market as investors. Net, most people have lost money, even in a good market. It takes a very different level of discipline to be an investor, and funds much better. Most individuals don't do a good job of it, right? Because investing, if I'm saying 1 in 1,000 becomes successful, from a people who've raised capital, maybe it's 1 in 50, 1 in 100.
Yeah.
Remaining just don't raise capital, but it's still 1 in 50 type number, right? So if you are an angel investor, if you're setting up a family office fund, then you have to assume that you have to do 50 investments on an average to have that one company which will become unicorn and will pay for all 50, right? If you're lucky, out of 50 there will be 5 unicorns, but most businesses are not built around luck, right? They're built around probabilities, and then you do everything to improve your outcome better than the average probability, right? But if you are investing, and if you're not even investing in 20 companies, it's very difficult to, you have to be incredibly lucky to make money if you're not investing in 20 companies. And therefore you have to ask yourself the question, do I have the bandwidth and the time to invest in 20 companies? Do I have the capital to invest in 20 companies? And like roughly equal size checks, because people get sometimes very excited by idea, put $1 million in it, and then they're done for 5 years because they had $1 million only. do you have the ability to get the deal flow to see those
Right.
200 companies? So from where you will invest 200.
Correct.
If the answer to all of these three is yes, then of course it's a great space. I think a lot of people who've done it well have made a lot of money. If the answer of any of these is yes, then you are actually better off finding a fund and investing in the fund, where the guy is actually doing this on a full-time basis and
Yeah.
it's his real job, right? So, but to me, I think it's very important to have the discipline of saying, I have to do at least 20 investments over the next 3-4 years. I have to do all investments roughly of the same size. One of them may be 2x than the others, but it can't be like 20x of the others, because then you're putting all your eggs in one basket. And I have to find out the time and the network to source enough deals and to evaluate enough deals, right? So if you can do all these three, do it on your own. Otherwise, sort of find someone who's better equipped to handle this.
That's a very important point, Suhail, you mentioned, and I think a lot of these people at CXO levels, somehow that ambition of doing something of your own, they end up investing in a lot of these startups. And the numbers that you gave is very important for them to understand that the number has to be around 20-25, because the probability of winning is, that is a reality. I mean, you have to accept it. You just can't put in 1 crore in a company, or you cannot put in 25 lakhs and expect that something sort of magic is going to happen.
You do those type of checks, but those are then friend checks, right? My friend is starting something, even if I'm not an angel investor, I will of course put money in my friend, right? I'm backing his ability versus doing a portfolio management as a VC should do.
Yes. No, agreed. And also on the entrepreneurship part, I think that's very encouraging. We all should start business. We have all tasted how it looks like. And yes, some people are lucky to get it high, but even if 5 years now gets invested, I think now India is ready, and that 5-year experience will be counted in your CV.
Yeah.
And it will carry more weight than a regular experience in a corporate job, if you can actually put that across that, yes, you have done some real work. Point taken. Point taken. So, so the message for the entrepreneurs you have definitely given that from your this thing, but one more thing that we are seeing is there's a lot of discussion. When the entrepreneurs, sometimes they get lucky. When I say they get lucky, I don't mean to say that they have not put in the hard work. The market swing is so good, and the sector in which you are operating is doing fantastic. And maybe you have just got into the sector at the right time, and then you have a hockey stick kind of an environment, and money comes easier. Have you faced this kind of an environment before around in your circle, and what did you gather, and what message would you like to say?
Yeah, no, I think a lot of founders have to get lucky. I think businesses are typically built. Most good businesses are actually built on the back of heavy tailwinds, right? It's no matter how good a founder, it's very difficult to build a meaningful business if you have severe headwinds, right? So I think being lucky is whether it's the right choice of sector, or whether it's the right choice of business model, or whether it's just pure luck. Sort of it has to play out. And like, for example, BharatPe is a classical story of like benefiting from the huge upsurge in UPI transactions, especially during the pandemic, right? So like UPI grew 5x. Like if I would have gone on a 2-year vacation, we would have probably at least grown 3x, 4x, right? So it's just being in the right place, right time. I think so. For everyone, life does give sort of some such opportunities. I think what really matters is then what do you make out of it, right? So when UPI was growing 5x and we were growing, were we happy with that, or were we trying to sort of grow at even faster rate? Were we launching even more products, right? Are you like sort of complacent that the core business is growing 30% and therefore innovation is suffering? And that's the same innovation which you got you there. But if that's not sort of continuous journey in your company, in today's fast evolving world, it's very easy for a business which seems very attractive today to be redundant 3 years down the line, right? So, so I think luck obviously is part and parcel of the game. Sometimes on your side, sometimes not. I think what you should focus about is doing your homework, whether you're in the right space, and sort of doing your homework on what your operating model, what operating model works for you as a founder and as a team, and then keep pushing the pedal and sort of keep doing better and hope that luck is on your way.
100% agree. Just keep working hard, and hopefully you're on the right side of the time.
Yeah.
You know, I remember one of the large payment companies in the country, when the demonetization happened, and I was discussing with the promoter of that payment company, and we met in one of the conferences, and he was the happiest guy in town.
I can imagine. I can also guess who the founder is because I remember meeting him around that time.
And he was munching cookies as if there is no tomorrow because he was very, very happy. But this happened one night before.
Yeah.
And the game changed.
Game changed. In a way, like for the tech sector, game changed at Demon. For the fintech sector, game changed at GST. For the fintech sector, game changed at, unfortunately, with COVID. And sort of these tailwinds happen in many sectors, right? Even on the consumer side, game changed with e-commerce, and then game changed with D2C, right? Now people are saying e-commerce kaun karta hai, right? Now you have to go all direct. So every sector sort of goes through those, like every few years, those magic moments. I think the job of a great founder is to find those moments and predict them sometimes, hopefully. But whenever that opportunity comes, make the most out of it.
Well, it's as you said, it's when you start, you get something right, it picks up from there, and things go right, things go fine. The continuous innovation and getting the team in place, and then predicting the future. I mean, you cannot predict the future, but then you can look into the future, and you can build up that innovation culture so that you keep innovating. That's the biggest task, I think. That's the biggest task.
Yeah. Absolutely.
Yeah. So my one last question to you is that one life-changing experience for you, personally or professionally, which changed you as a person.
I think there have been a few. Very difficult. I'm very old to like say that I've had only one life-changing experience. No, I think for me, my sort of leaving McKinsey, I think was a big professional sort of decision, because it is a firm I always loved. I still tell every sort of graduate, young professional that if you get a chance to work in one company, it should be McKinsey, because I think what you learn in a consulting setup, working with variety of clients in a variety of sectors, is sort of unparalleled. But also McKinsey makes you very protected and secure, right? It's a firm which has great systems. Most people who get in are anyway sort of top of their class, and then it gives you everything you need to succeed, right? It's a big decision to leave the firm. A lot of people are not like most people think about it at least 10 times before they finally take the plunge. And like everyone, it was sort of a very shaky moment in my life. And Sanjeev Goenka, who I sort of joined, said, FMCG banate hain saath mein, right? I had no clue about FMCG. I used to do a lot of energy and venture investing work at McKinsey, and a bit of tech work at McKinsey. And it was sort of a big leap of faith he took. And like so stupid, like my first conversation with him, which was around October of 2016, was, can we launch by March, right? Which is next year, 5 months later. Brand, like we had not even decided which category we are launching in, right? So ye bhi nahi pata thi snacks launch karenge, right? He said, can you launch it in 5 months? And I was like, like, if you don't know now, you feel like, how difficult can it be? So I said, of course, we can launch in 5 months. 5 months is a lot of time to launch a FMCG business. And then we went back to the drawing board. I was the only employee at that time, right? So got a bunch of consultants, and everyone told me, like, it takes 1 year to launch for a HUL type company to launch a product. You're talking about not a product. You're talking about, first, let me figure out which category I will operate in. Then I will figure out brand. Then I will figure out subcategory, and then I will figure out product. And all this I want to do in 5 months. It's a 18 to 24 month journey to launch. And I was like naive, and I said, like, ye to ho jayega. We did launch in 5 months, right? So even like sort of Cantor and all these guys who do research and consumer will tell you it's sort of the fastest launch of a product they have ever seen. And a large part of it was share ki aata nahi hai to you figure out innovation, right? So like it worked really well. Parts of it were so stupid that now in hindsight I say, ye maine kya kiya tha, right? So then the most stupid thing was product and packaging. Normally, first you build product, then you build packaging. It follows a sequence, right? I built product and packaging in isolation. Both looked lovely till they came together, because that packet was 90% empty, right? And consumers don't care about grammage, but they care about the perception of being cheated. Itna bada packet diya and itna sa snack. And we did not, this is just one mistake. I did 10 other such mistakes. But in hindsight, it took me 3-4 months to correct those mistakes. But net, the outcome was 5 months to launch and 4 months to correct mistakes. And in hindsight, I realized that no matter how much research you do, nothing can replace time in the market. Market is the best teacher, right? So, and since then, sort of one of my core principle is being time to market. Let's get it out, get the product out there, expose it to less number of people if that gives you more comfort. But this intellectual conversations in boardrooms and like sort of 3-month planning, 3-month development, 3-month testing doesn't work, right? And that's actually the DNA, which what I loved about BharatPe, even when I joined and today also. We launch products in a month, right? Many times. It's like something will be wrong, market will slap us twice and we will understand, right? And we will correct it. I think to me, that's been always the mantra since then. That experience gave me incredible confidence in sort of getting most things done, whether I know them or not. That also sort of became the lifelong goal of time to market and optimize for that. And then also suboptimal product to market, it also means that you listen to the consumer a lot more, because the first 3 months of learning consumer experience is most critical in that scenario, because it helps you build the right product for the future, right? So that's been, at least that sort of setting up the FMCG business from scratch was sort of a very unnerving and probably the most learning led phase of my life, and that hopefully is something which I sort of will always keep up with.
Lastly, Suhail, one fun fact about you, what people don't know.
I'm big into sports. I used to be a scuba diving instructor till I ruptured my eardrum. And like right now, I'm itching to actually become a paragliding instructor. So I'm hoping to, in fact, very soon in the first week of July, do my intermediate course in Austria. But I love sort of doing one sports, which is conventionally considered risky, but actually are very safe sports, right? So, so that's something which I feel keeps me grounded and sort of keeps me, re-energizes me whenever I sort of come back to work.
Excellent, excellent. Thank you so much of your time, Suhail. Thanks for taking out time. And I really enjoyed the conversation.